And we are ready to start. Welcome everybody and good afternoon. It's very good to have you here today in the Financial Services webinar brought to you by ADA. And today we are going to talk about rising to the digital challenge in the new world. And the new world, as you can guess, is the new world that has been brought to us by COVID and by the lockdowns. In the last couple of months, each one of us have gone through a crash course in digital collaboration and virtual collaboration. Now we use Zoom for business and also to have meetings with our friends and family. We use tools like DocuSign to sign documents. We finally discovered that a pen is not needed. And also, we have switched a lot of our buying activities onto e-commerce. We may even get a daily delivery from Lazada in these days. And so what we want to talk today is what has happened in the financial services and what needs to happen in retail banking and insurance. Before we get started, I just wanted to share something with you today. A couple of weeks ago, just towards the end of the Malaysian MCO, what I decided to do, I decided to change my bank. I was very unhappy with the bank that I was using because it was too difficult to download the transactions. It was too difficult to set up payments for the future. And so I said, okay, that's it, I'm done. I'm gonna go with a large financial services institution in Malaysia. And of course, because we are in COVID, I will be able to do everything online. And so I went on the website, I typed my name, Vittorio Furlan, I typed my email address, and very optimistically, I pressed that button saying open account. And guess what? I did not open an account. But 2 days later, I received an email from them asking me in which branch I wanted to go to open the account, and they reminded me to bring my passport. And so I went to the branch, went with my passport. After 1 hour of signing documents, taking copies of my passport, the bank account was finally open. And so you can tell I was very optimistic, and I was probably a little bit naive. And that's why we're having this webinar today on financial services rising to the digital challenge in the new world. My name is Vittorio Furlan. I'm the head of business insights for ADA, and I will be the moderator for today. And I've got a great list of presenters with me today. Let me introduce them for you. I have Keith Lee, who is the head of financial services for business insights in ADA. Keith has spent most of his career working in the FS sector for research agencies. I have Faraz Khan, the regional head of acquisitions for ADA. Faraz, as part of his job, has the pleasure of helping banks and insurances to digitize the customer acquisition. And finally, and very importantly, I've got a special guest today, Michel Hamilton. Michel is with Maybank Indonesia and is the Chief Strategic Planning and Project Management Officer. So welcome to all three of you. Now let me also introduce ADA. ADA is the largest integrated digital analytics and marketing agency in South and Southeast Asia. And when we built ADA, we wanted to be very different from any other agency. We wanted to have the best knowledge of the consumers in the region. And we achieved that by putting together data and artificial intelligence. We operate out of 9 countries in the region, and today we are live from Malaysia and Indonesia. Now we want to get lots of questions for you. We've got a nice presentation, which we're going to go through in the next 35 minutes or so, but we also want to keep some time in the end for questions. And thanks to all of you that have already submitted questions at enrollment time. I've got them in front of me. But also, we would like to ask questions throughout the session. If you just go in the Q&A button at the bottom of your Zoom window, you will be able to type and also upvote questions. And please remember not to use the chat for questions, because otherwise we would not notice them. So we are all set to go. And the first thing that I'm going to do, I'm actually going to ask you a question. Let me just pop the poll up. I'll let you read it and answer it. All right, most of you seem to have voted. Let me share the results. A few more answers are coming in. Let me just end the poll now, and I will be sharing the results straight away. So the question is, are you satisfied with the current onboarding or authentication process of your digital customers? And the vast majority, nearly half of them, is satisfied, but things can be improved. And notably, only a few of you, 6%, are very satisfied. Now that's very, very interesting, and it's a great segue for what we're going to talk next. I'm going to shortly hand over to Keith Lee for our first challenge of the day. We have prepared the two challenges for you to talk about. And the first one will be the digitization of the customer onboarding becomes a non-negotiable. Over to you, Keith.
Thank you very much, Vittorio. Hi, everyone. I think it's encouraging to see that most of you do see a room for improvement in terms of how you can actually enhance your customers' digital onboarding process. And that is exactly why we're sharing with you some of our observations today. So if you go to the next slide, you can see that in the current situation, I think globally we are all cognizant of what's happening around us because everyone keeps talking about digital transformation. And for financial services is without doubt one of the industries that are likely to undergo some form of disruption. But at the same time, we are also looking at some regulatory situations where the global regulators are gradually looking at the new era of digital banking and how to actually create a microfinancing environment to actually ensure that everyone gets access to some form of credit. But at the same time, I think when it comes to transformation of a customer onboarding process, we are generally also looking at the traditional KYC methods of authentication. And where do we strike the balance here in this case? Simply because on one hand, you're looking at a greater millennial pool of customers who are also demanding or gradually demanding more digitized ways of onboarding for their financial products. But at the same time, the incumbent processes that is being imposed by either the local regulations or the financial industry players requires a lot of face-to-face interaction and physical documents in place. So where do we strike balance on that? And as a result, digital customer verification tools and risk assessment tools becomes the paramount for integration into the FSI's digitization journey. And at the same time, if you go to the next slide, so when we look at the region as a whole for Southeast Asia, we are potentially looking at 32% of the population who do not even possess an official identity. So not to even mention the aspiration of trying to onboard customers digitally. The region itself is faced with a situation where we do not even have a sizable population who has an ID. So where do we start from there? And at the same time, I think the opportunity is clear for us to see, where McKinsey reports that if anyone who's able to crack the eKYC process may potentially be looking at 90% of cost saving for the customer onboarding. But despite all these benefits that is presented to the industry, we are also looking at a huge risk in place, whereby in terms of data security considerations, over the past decades, we have seen the four main continents being imposed at up to $26 billion fines due to non-compliance. So striking the balance becomes extremely important in this case. At the same time, when we look at the insurance industry, I think the industry players are also undergoing their own digital disruption. And this is with a slightly different agenda, where cost savings and the improvement of customer satisfaction and experience becomes paramount with the utilization of digital strategies and tools. As a result, when we look at the performance of the industry in 2019 alone, insurers have been observed to spend 5 billion, up to 5 billion on digitalization initiatives, which is 4.5% more than the previous year. And based on the survey results from GDP, we are also seeing 61% of the customers saying they would prefer to check their applications online. So that shows how customers are becoming more attuned towards digital experience in their financial services. And we're also seeing some interesting development, such as Antidote and ZhongAn. So Antidote actually has been able to create a digital cloud platform by creating a predictive analytics platform, utilizing machine learning, AI, big data, etc., to actually help insurers create a more comprehensive views about the insurance customers. And likewise, ZhongAn in China, for example, they are the first complete online insurance company. And since their inception, we have seen them being able to onboard up to 660 million users, and they have been able to underwrite more than 5.8 million policies, all through the digital means. So some very interesting development happening in the insurance industry. And the key challenges that we are observing here creates a dilemma. Why is it a dilemma? Simply because when we look at from a regulatory perspective, the global regulators are actually imposing more complex and stringent rulings when it comes to AML, CFT rulings, which requires a more robust way of being able to onboard and assess a particular individual. But at the same time, I think striking a balance between operational efficiency and strict governance becomes extremely important, and it's becoming a more challenging aspiration to meet, simply because banks, at one hand, have to maintain operational efficiency by not imposing too many stringent processes for the customers onboarding. But at the same time, there's a certain set of regulatory requirements which needs to be struck. And then fundamentally, when we look at lack of automation and quality reference data, so as I mentioned earlier, the significant lack of digital identity for the population then becomes the challenge. And when we look at APAC industry, APAC region as a whole, we are potentially looking at 40 different regulators who have very different perspectives in terms of how eKYC or digital onboarding process needs to be governed. And as a result, we're seeing some stats being published by FICO, where up to 3/5 of the banks in APAC still do not have a digital account opening capabilities for their customers. So would that actually invite a deeper consideration on infrastructure readiness? So here we are seeing some interesting development from the ASEAN perspective. I think the key takeaway that we can deduce from our findings here is that banks and financial institutions across the board are also gradually looking at digital ways of onboarding their customers. For example, in Thailand, we're seeing UOB adopting fingerprint authentication, and likewise in Philippines, Malaysia, Indonesia, we are seeing gradually more players adopting new technologies such as video recognition, OCR, and even machine learning to actually automate and optimize their customer onboarding process. I think the results here is clear for us to see, where generally across the board, we are seeing a significantly shortened onboarding time for the customer of up to 10 to 20 minutes. And while things seem to become rosy, we are seeing a situation which all of us did not anticipate, right, which is a COVID-19 pandemic. And why is it particularly, in my opinion, a catalyst for financial players to even take eKYC and digital onboarding more seriously is because I guess we all experience, as what Vittorio has shared earlier, the barrier of face-to-face interaction. So you're potentially talking about customers facing difficulty to visit the branch for their banking services, and for the onboarding of the customers, which typically requires physical documents and legitimate authorization signature becomes impossible. And with that in mind, I shall hand it over to Vittorio and Michel to share with you some perspective from Indonesia.
Hey, thank you very much, Keith. It was interesting to hear that my story is not really unique, but it's also interesting to hear that there are many changes that are actually happening. And so I wanted to double click to Indonesia, which is one of the largest countries in the region. And again, we have Michel Hamilton from Maybank today with us. So welcome again, Michel. Michel, tell us a little bit about what is your experience in Indonesia in doing digital customer onboarding.
Yeah, thanks, Vittorio. I guess the road to digitalization is still already happening since a few years ago. It's just that with this pandemic happening, it's become faster and accelerated even further than we thought. And interesting to see that the digital onboarding is already happening everywhere, including our banks. We have already been able to do a full onboarding in KYC online without the needs of having visiting our branches. But obviously, we are not the only bank that can do that today. I mean, among the top 10 banks, I believe all of them is already being able to do so. But the challenges now, when I see the polls, right, saying that everything is satisfied but could it be improved, the way we are moving people from a physical process to digital, as if like we are copying the process from the manual or conventional way into a platform, right? But what's important in digital is also be able to simplify the process. It's not like you copy the process as is to your digital channels because it may not be able to improve the customer experience. We need to make sure when we actually move everything to digital channels, you actually increase the experience. You need to be able to reduce the SLA required by having some data probably can be pre-populated. For instance, when you actually take a copy of your ID, some information in your ID can actually be, recognized using OCR and then pre-populated some fields. Those kind of things may need to also be taken into considerations when we actually put it into the digital space. It's not only trying to mimic your existing process from a manual into a digital platform. I guess that's the challenges, how we can actually improve it further so that the customer experience is going to be better. It's not only by moving from the physical channel to a digital channel.
And that's very interesting because it really reminds us when we first moved to digital that we were just copying the existing processes and make them digital as opposed to looking after the actual customer experience.
Exactly.
Michel, you in terms of customer experience here, you mentioned offline that Maybank developed a couple of ways of doing authentication and onboarding. One that was fully fledged and one was light. Can you tell us a little bit more about that and also how they affect customer experience?
Yeah, because we need to comply with our regulatory requirements in terms of the full KYC. And for that, for our people to be able, for our customers to be able to access a full capability of our financial services. But if we need to help people to onboard and when they actually only need to have a very simple and light features of the financial services, we can actually onboard them with a light KYC, I would say, and make them accessible to a certain degrees of the financial features. And when they actually need further than that, then they can actually convert themselves to be a full customer that is already onboarded into our system. So we try to segregate when people actually just need a very simple features. They can actually onboard with a light KYC, quite easy and very simple, but they have access limited to our financial services. But when they actually need to have more and more features, they need to be upgraded into a full customers, and then they will be able to access all features that we have.
Oh, I see. So that you basically simplify for the customer the onboarding if they don't want to go through a full process. And yes. What's the response of the regulator? How's the regulator in general see eKYC and digital onboarding?
I guess nowadays is inevitable. I mean, probably in the past, regulators is very concerned about the data security, leveraging our digital as what Keith already mentioned before, right? If we move everything to digital, we are actually introducing a new level of risk, which is the cyber security or data breach. And that is where probably our regulators need to have more understanding about that risk and how to mitigate that before they can actually come up with a certain policy or regulations to make sure that we are able to protect our customers' data. But that also, when the pandemic is happening, everything happened very fast. We just need to adapt, and we need to ensure that we're still compliant, and we are looking a way how to ensure, the data breach, the data concerns, the security breach is being protected, because we have no tolerance against that. So we are doing that in the eyes of our regulators, that everyone is actually ensuring the protection of the data security. And but now they are a fully supporter to go for in digital as one of our key capabilities to move forward. And that is also the mindset that we have in our internal, such as our risk, operations, and compliance.
That's good. That's good to hear, and it's good to hear that the regulator is accepting that this is a change that is much needed. And one last question to close. Often it's the organization itself that struggles with this type of change. How do you see the response of your own institution or other institutions in Indonesia?
It's a very good question, V. I guess we are very much concerned about giving a digital features to our customers, digital capability into our customers. But sometimes we forget in our internal process, we need to also to revamp, to make it more digital in our internal organization as well, and revamp it in such a way that we are become more agile and more faster in responding to the market demands or market needs. It is very inconvenient for the customers when we already introduce a lot of digitalization for them, but yet when they're actually having concerns or problems, and they come back to us, and everything becomes more traditional and conventional. So that's also the balance that we need to do. While we are actually doing digital services to our customer, we also need to transform internally to ourselves so that our process is become more digital, more paperless and simple, and we be able to respond to the market changes rapidly.
So agility is the secret. Hey, thanks, Michel. Thanks for answering this first set of questions. And we are now going to move to the second challenge of the day. And I'm about to open the second poll. We again want to hear from you. But also as a reminder, please ask questions through the Q&A button at the bottom, and we will respond to the questions towards the end. So let me present the second poll of the day. All right, appears that now we are quite stable, and most of you have actually responded. So let me end and share the results. So the question was, what is your observation on loan approval rates at your institution? And most of you are actually saying that it's declining, but it's interesting that it's almost one third. Which is probably expectable since the turmoil that the current situation has caused, both in increasing the overall concerns about repayment, but also increasing the needs of some consumers. So with this, let me hand over again to Keith for the second challenge of this presentation. And the second challenge is striking a balance between financial inclusiveness and the credit worthiness. Over to you, Keith.
I think it's quite interesting to look at the results from the poll, and it seems quite a number of you has been able to crack the puzzle, which is quite interesting. But I think at the same time, we are also looking at some situation that would trigger the need to actually strike out the balance between financial inclusiveness and creditworthiness. So when we start off looking at it from the global perspective, we look at the FS regulators are seemingly on a mission, right, to actually come up with more initiatives that harness financial inclusiveness for the unbanked, underbanked SMEs, and most importantly for the unbankables. Now, what do I mean by unbankables here? Refers to individuals or corporations who have certain kind of credit history, but somehow doesn't fit into the current ecosystem because of not being able to fulfill the criteria for the conventional banking services. So if you look at the next slide, some of the challenge that we observe, why is it causing such a scenario? First one being the incumbent systems, the traditional credit scoring methods that's being adopted, and how we actually look at loan approvals as a whole. So if you look at the methodology that is being put in place in today's context, I think majority of us are seeing quite a heavy skew towards historical financial behavior as a basis to evaluate a particular person's or company's credit behavior. But at the same time, I think the other consideration here is, so if we want to move beyond that, how do we actually create a more cost-effective approach? Because I think there's a significant investments being put into the incumbent credit scoring system, for example. But how do we actually come up with something that justify the cost to conduct secondary assessment? And what are the tools in place for us to accomplish that? And I think Asia or APAC as a whole, we're seeing SMEs facing huge challenges when it comes to securing loans. And based on our research, it's mainly due to the lack of credit history as a main barrier. And all these challenges seems to be signified by the current, again, the COVID-19 situation, where as you observe throughout the region, due to the difficult period, governments across the board are actually providing moratoriums for loan repayments. So that also means banks are gradually facing higher liquidity challenges or issues. But at the same time, business still needs to go on, right? And where do we actually find good quality customers that meet the criteria for loan approvals becomes an extremely testing environment for the FS sector as a whole. And this has been backed by S&P Global Ratings findings. Just purely looking at COVID-19 situation itself, in 2020, based on their projection, we are seeing a potential non-performing assets and consequent credit loss of up to $300 and $600 billion respectively. So I think what is at stake here is significant because, as I mentioned earlier, due to the challenge of COVID-19, securing good quality loan applicants becomes extremely challenging. And on the flip side, I think the opportunity is vast, simply because if you look at the population size of ASEAN as a whole, we are potentially looking at only 27% who are being able to get into the conventional banking system, right? There's a sizable 73% or 438 million of unbanked individuals who are still yet to even own a bank account. And as per ADB's projection, if we are able to successfully tap into this pool of individuals, we are generally looking at a potential 6% uplift of GDP for the region and up to 3 times economic contribution by 2030. And we've also observed some interesting development in our region. Say, for example, in the Philippines, we're seeing CIMB Bank being able to expand their customer base by undertaking the all-digital mobile banking platform. And what this mobile banking platform does is it actually leverages anonymized metadata to actually assess and underwrite customers for personal loans. So that creates a more effective environment to come up to identify good quality customer that fits into the bill. And likewise in Cambodia, we also seen everybody who has actually also come up with their own credit scoring distribution system, which is a collaboration with the incumbent financial institutions, purely catered for the rural credit customers. And I think to date, based on the pilot program that they've rolled out, they've managed to avail up to 2,000 farmers with some form of credit, which is quite commendable. And in Singapore, we're also seeing Lando adopting similar methodologies by leveraging on alternative data such as social media activities, browsing behavior, geolocations, smartphone data, etc., to actually form up and form an opinion on a particular individual's creditworthiness. So with all this observation, I shall hand it back to Vittorio and Michel to share with you some perspective on Indonesia.
Thank you very much, Keith. And it was quite, I don't know exactly which word to use, but to hear that there are 438 million unbanked customers, it just sounds a huge number and really a huge opportunity for the industry to access them. But again, let's double click again into Indonesia with Michel. What really fascinates me is in general the approval of loans and all the processes and the criteria that are used for that. What are the main factors that affect the approval rate?
Well, thanks, Sri. First, I think just to share, right, what's usually being reviewed if you want to give some financial services or lending to our customers. That is what we call, this is a framework that has been there for the past few years, almost a decade or more. It's the 5C, right? You assess the capacity, you assess the character, the condition, the capital, and the collateral of a person, right? And those information typically we collected through a traditional process where we ask questions and to assess their character. We look at their transaction historical data to understand their transaction behavior and assess whether this is a good person or a bad person, right? Or we have a risk related to the person's business itself. But nowadays, if you want to talk about financial inclusion, these people actually doesn't have any historical financial transactions that we can actually assess. And that's become one of the challenges if you want to onboard them and then be able to provide them access to the lending business. And that's where we look how the fintech rise to help to bridge these gaps, right? The fintech can actually play a critical role as they are actually working in a micro lending or micro financings and giving to these unbanked or underbanked people, society, to make sure that they have a good record of transaction behaviors. And when we actually, as a bank, can work together with this fintech in order to serve the customers in a broader way, because we is a highly regulated industry. We need to comply probably not only to our local regulators, but also to the US, to the global, to the world, right? For that reason, it's very difficult for us to onboard someone that doesn't have any, a good IDs informations, or some of our people also doesn't have any legitimate ID, or even not knowing what other business that they're working for. So I guess that's one part of how we can actually improve the credit assessment is by working together with ecosystems, developing this ecosystem, not only about fintech, but also a tech company like e-commerce, like payment or anything else, so that we can actually holistically see the behavior of a person and look at that data as a new data points for us to assess the character and the capacity and the condition of a person. And the other angle of that is how we can actually improve the leads quality. I guess when we talk about the approval rates, we need to make sure that we are actually going into the right segment that we want to, because every organization will have a different risk appetite. We need to make sure that we are engaging to the right customer with the right risk appetite that we want, so that we are not trying to shoot in the blind, try to do a mass marketing without knowing who is actually the right person that is aligned to our credit risk appetite.
So that's interesting to hear your comment on the ecosystem and the fintech. I would say that often we may think about fintechs being in a direct competition with large financial services institutions, but the way that you talked about that, it did not really sound that this is a competition. How would you see it happening in the Indonesian market?
Well, I guess I'm only be able to talk whatever that happening today. Yes, we are not a direct competition per se, right? But who knows what's going on in the future, because the definition of the industry will become blurred, right? I mean, everyone can be anything. But for today, there are certain segments and certain complex financial services that we are serving to a certain customer segments. And there are some things that is more simple and probably more relevant to those unbanked or those that is not yet have access to the financial services. And that is where the fintech can play a critical role, or a tech company. And then we can actually complement each other in a way that to provide a holistic solutions to the customers. So we should be able to see ourselves working together with this tech company or a fintech company to provide a more holistic solutions for our customer, instead of trying to use the traditional way of thinking is to compete with that. So that's how I see it. And I guess with the news what happening today, we can see that a lot of banks also having the same thought. They're starting to collaborate with fintech or tech company in order for them to come up with a new business model, a new offering to serve the customer needs.
Oh, I see. That's actually a very interesting view of the relationship, at the very least for what it is at the moment. And you also mentioned about the quality of the leads, which really is one way that then determine whether the loan or the credit card will get approved or not. I know that Faraz will talk much more about this in this part, but do you want to tell us more about what is happening in Indonesia, Michel?
Yeah, right now, I mean, for us, when we try to increase the approval rates of a credit worthiness check, is also to start with having the right quality of leads. What does it mean? It means that we are a diverse society. We have so many people with so many different characters. We need to know what sort of characteristic that align to our risk appetite, as I informed before, and how does that information being applied and filtered when we actually go to the market, and be able to look on those prospect customers that is aligned to our business. So we want to make sure that they also be comfort, right? When we offer something to our customers, we need to make sure that we offer our services to the customers that align to our risk appetite. We don't want to have a customer experience where a lot of people we offer for them to join us, but yet they cannot pass our credit criteria. And that's become a bad experience as well. Even though they are not our customer, they're a prospect customer. And when they have a bad experience, they can also be a bad, word of mouth saying about us to the others. So that's how we need to change in the way we are generating leads. It's not any leads that we want to get, but we want to have a good quality of leads. Leveraging data and analytics obviously is one of the key for us to match who are the prospect customers that's aligned to our business appetite.
That's good to hear, and it's a good segue for Faraz. Thanks, Michel. And Faraz, as I mentioned, is an expert in helping banks and insurances to digitize the customer acquisition. So over to you, Faraz.
Thanks, Vittorio. And I think, yes, it's a very good continuance from what Michel has put. And I will cover quite a bit of depth in that, because banking success in 2020, obviously there's been a lot of conversation in this forum about an integrated digital ecosystem. The starting point of this is the digital consumer acquisition, right? Acquiring the right consumer, and rightly said by Michel, where there has to be a focus on who do you want to bring in. Does our product map into the consumer that we want? Are we even defining the consumer correctly? So there's a lot of things that go in, which I will dwell deep into. In 2020, an integrated digital ecosystem like this is something that needs to come up for consumer experience, a positive experience, reliability for both sides in terms of who that right consumer is. Security, rightly mentioned by Michel, is critical in this approach. And also, just reconnecting to the example that Vittorio mentioned in the beginning, where his experience of onboarding by a bank took him in a dearth from online to offline. And this is something that an integrated digital ecosystem will solve, because once a consumer experiences a negative experience, that's something that will defer him. And Michel's been talking about that. Now, I would like to share with you what are the critical elements for point one, which is how do you acquire, the right consumer? Because if you don't acquire the right consumer, the entire ecosystem falters. And without the right consumer coming down and to your doorstep, it will not make a difference, which is your digital website, etc. So moving on. So there are three critical elements that we should be looking at, which are critical in defining the success of getting the right consumers on board, right? Whenever we define consumers, who our potential consumers are, we always look at, and we always look at from an organizational banking perspective, we look at inwards. We look at what product do we have and potentially who would buy them. But actually you need to look at a holistic process in defining that consumer. So you've highlighted that this is the potential consumer, but there has to be a data-driven segmentation that has to be done, looking at offline behaviors, online behaviors. Defining these segments is critical in defining who your potential consumer is going to be. Number two is, so you define the perfect consumer persona or segment to attract. And this is the person, or these are the segments that are gonna purchase your service, your products. When we talk to them from a marketing standpoint, we at times don't talk to them in what that segment or interest or behavior relates to. So our creatives have to be data-driven creatives. They have to rely on what is the behavioral profile of that consumer to define how do we talk to them. You can't have a generic one-size-fits-all creative talking to three different types of segments that are belonging to three different types of products, right? And also, it is absolutely critical that when you go out into and you do digital advertising, you can't have a platform-led approach. It has to be a very audience-led approach. It has to focus on the segments that you've defined. Where are these guys in the digital sphere? Now, the third key component in all of this is are you using AI tech, the latest tech, in terms of driving that consumer to your doorstep, which is maybe your app, your website, and have you clearly defined that consumer onboarding journey online, which is easy for the consumer, which is attributable to the investments that you're making on digital? A lot of times, there's a lot of falter between, I've spent this much of money, how many consumer leads have I got, or how many consumer approvals have I got, but the journey itself is not defined properly. Proper tagging is not done. So that has to be considered. Let me give you an example of this in a little bit more detail. Okay, so reimagine this acquisitions approach, right? So step one, when you're defining the consumer, you have to look at the whole consumer segments based on their personas, the eligibility of the banking product, and this has to be properly defined in the digital sphere, because the next step is you're going to go and find them and talk to them. So in the define stage, the critical question to ask is, how much effort are you making in defining the consumer, the segments, identifying them in the digital space? Now, I'm not talking about Facebook, Google targeting elements. I'm talking about proper definition of the behaviors online. Number two, we've talked about this in the previous slide. Are you having an automated data-driven communication to these consumers? When you're trying to attract them, you're talking to a person where you're trying to sell a credit card, which is for frequent flyers. Now, you can't have communication or creative that doesn't have anything that resonates with that person or that behavior, that the segments that you've defined in stage one. So the question here is that you should be asking your partners and yourselves is, are your creative decisions based on a hunch, or are they based and backed by data? Number three, this is the discover phase, right? When you reach out to your audiences via digital platforms, etc. Now, it is critical for you. You've defined a consumer segment. You should be able to go after an audience-led approach. You should not be going after, I want to buy Facebook, I want to go on Google. This is not the approach that you should have. So the critical question in the discovery phase, when you're actually going out and talking to your consumers, is, are your agencies or partners still talking about platforms? Are they talking about Facebook? Are they talking about Google? Or are they talking about, this is the approach, an audience-led approach to finding your consumer? It doesn't matter which platform it is. It's irrelevant, right? Point four, when you are trying to engage them. Now, a lot of times we have a single line of engagement that we have with our consumer, which is our website or our app. But now there's a holistic lot of conversational commerce that are out there in the market. Now, have you applied conversational commerce like chatbots to your entire engagement portfolio with your consumer? How many avenues? So the question to ask is, how many avenues do you have to engage with them, to talk to them, to drive them towards a lead or an acquisition, right? Or the final approval. Now, you have to have many connections, convincing. So conversational commerce is key in this process. Number 5 is, having a real-time consumer evaluation via eKYC. Keith has talked about this, but also a smooth onboarding process, right? There's a lot of times when you bring in a consumer, but the journey itself is broken, or the consumer finds it difficult to navigate that journey. So it is very, very critical to look at the depth of that journey. You've made all this effort from points 1 to 4, and you're not looking at the journey when they actually start taking the journey with you on your digital assets. The question here you need to ask yourself is how this non-applicability of all of this, and looking at the journey, the tagging, how well is my journey defined online, in the app or on the website, how is it going to impact my business? How many people are going to fall out of it? So I think we need to, and at ADA, we actually run through this entire depth of processes with clients to work on business outcomes with them. So because each element is very critical. Well, that's about it. Vittorio, over to you.
Thank you, Faraz. That's very interesting to hear, especially the link with what Michel was saying about the quality of the leads, and really avoiding in a way to waste people's time with pointless offers, and also waste the organization's time with those offers. Excellent. So we are basically done with the core of the presentation. We're going to switch to Q&A. And thanks to all of you that have already submitted questions at registration or during the session. And I'm going to get started right away. I've just got the list of questions in front of me. And so I'm gonna start. Probably the first one is going to be for Michel and Keith. From Anonymous, is asking whether the digitalization in account opening and KYC might decrease the number of walk-ins and therefore require a lesser number of branches. What are your thoughts, Michel and Keith?
So maybe I can start with that one. I guess a bank business or financial services business is a trust business, right? People put the money with you to get security, right? Instead of putting your money in your house, right? And sometimes the trust can only be obtained if you can see that their presence is available. So the definition of the purpose of a branch will shift from a transactional central to be a sales central, right? It's a consultancy central. So it may reduce the number of branches. That is inevitable. It's already happening since few years ago. But it doesn't mean that we don't need a branch at all. Sometimes we need our presence, our physical presence, to the point that they are actually secure, that we are not just anywhere in the cloud, right? We are here physically available. We are here keeping your money safe with us. And that's where the branch purpose will be shifting from a transactional operation central to become consultancy and advisory centrals. And when we shift that, the way the branch structure will be different from the cost structure, from the infrastructures, or even the composition of the peoples that needs to be on the branch. To some degree, we may no longer need a branch, but we still need a physical presence in the format of a kiosk, perhaps, right? Just to make sure that there are a point where our customers can actually go to the points and then be able to comfortably asking questions and seeking advice. So yes, the number of branches will reduce, that is for sure, but the operational of a branch, the cost per branch will also be different if we still continue to keep the existing of a branch.
And Keith, would you concur, or would you like to add some more?
That banking and financial services industry or business as a whole strongly hinges on trust. So I think moving forward, there's going to be a coexistence. I don't see a possibility of a complete replacement of physical bank branches through digital means. But I think digital banking is a mean to actually enhance customer experience through more effective ways of onboarding. There could be certain processes that can already be done within seconds or within minutes through digital means. So I see a greater integration between these two moving forward. And I think the next consideration here is while thinking about replacement of branches, should they be a side of thought that relates to whether or not we are keeping branch effectively, or should they be a more effective ways of maintaining branches in a strategic and effective manner? So those are the possibility that I see moving forward.
So really reconsidering the role of the branch. There are a couple of questions that probably are for Faraz regarding ADA. I'm going to bundle them together. One is what is the differentiator of ADA in the financial services sector compared to other agencies, and also which AI technology for digital performance is ADA using? For your best suited for us for this one.
Sure. From a differentiation perspective, I think our entire approach is based on data, tech, and AI in terms of applications of garnering consumers, right? We focus, like I shared with you, all the processes that I've shown you is focused on defining that right consumer. We have a lot of data that we work against in terms of driving devices, learning behavioral profiles online and offline. Most of the agencies do not have this sort of data, right? We have our own DMP, which collates behavioral profiles. We have data scientists who work on collating and building those segments and approach. And also, I think the biggest one is ADF believes and focuses on outcomes, right? We believe in working with our clients on their business outcomes. And the business unit that I head in terms of acquisitions focuses wholly on taking a step forward into aligning an outcome that is, fruitful for the business and working towards that. So I think that's the differentiating factor. In terms of AI tech, it's not about which AI we use, it's where are you using this? So there's a lot of buzzwords with AI and machine learning. We have applications of this in different arenas. So we have machine learning that's being applied on our data portfolio side of things, where we do the segmentations, behavioral profiles, predictive analysis. We have AI and tech, which is being utilized for optimizations of campaigns, optimizations of our segments in terms of which segments are working, which behaviors are coming together and working, who are we targeting that is eventually landing up to that business outcome that we've defined. So this is where the applications of AI tech are being done across the board. And obviously it's dollar and cents value that is always put into perspective. Money is a gameplay all the time because that's from the client's end and our end. It is very, very crucial on how do we optimize and analyze the result at the best effective cost, right? And that's where the applications happen across the board.
Excellent to hear that, Faraz. And we are nearing the end of this webinar. So I wanted to thank our three presenters today. Again, Keith Lee and Faraz Khan from ADA, and our special guest, Michel Hamilton from Maybank Indonesia. Thanks to all three of you for coming today. If for any reason any of your colleagues or friends missed the webinar, we will be publishing the recording on the ADA website. And also, if you have more questions or you are interested in talking with us, please do reach out. We will be more than happy talk with you. So once again, my name is Vittorio Furlan. Thanks very much for coming today, or if you're watching the recording. Take care. Goodbye.